This is Nightly Business Report with Sue Herrera and Bill Griffin.
Historic low. The unemployment rate falls to levels not seen in 50 years, and the stock market takes off. New headache. A group of migraine drugs were expected to help sales for Big Pharma, but the results have not been pain-free. Quantum leap. There are smartphones and smart homes, but what about a smart switch? Meet the entrepreneur who created one and had the bright idea to digitize the way power is delivered. Those stories and much more tonight on Nightly Business Report for this Friday, May 3rd. Good evening, everyone, and welcome. Bill is off this evening. The NASDAQ closed at a record. We'll have more on that in just a moment, but we begin tonight with the strong labor market that is showing no signs of letting up. The unemployment rate fell to its lowest level in 5 decades, with many economists saying this type of strength is unusual for a recovery that is already 10 years old. Just take a look at these numbers. 263,000 jobs were created in April, a lot more than expected. The unemployment rate fell to 3.6%. Wages are up 3.2% from a year ago, and that lifted stocks. The Dow Jones Industrial Average rose 197 points to 26,504. The NASDAQ was up 127, and the S&P 500 added 28. Not only was the jobs report well received on Wall Street, but also on Main Street. Elon Mui starts us off tonight.
38-year-old Essence Gilbert arrived at this job fair in Maryland on a mission to find her next opportunity. She's in the middle of a career change from marketing to human services. She started looking for a job last month and feels the future is wide open.
I don't want just another job. That's all I've been doing, a contract worker or, job here, job there. I don't want that anymore. I want something that's more career-based, and to actually float around a room and hear that from 3, employers as represented today was just awesome for me. So I feel good.
Right now, potential hires like Gilbert could have the upper hand. At 3.6%, the unemployment rate in April hit the lowest level since December 1969, and that leaves companies fighting to find qualified workers. The healthcare sector added 27,000 jobs in April. Construction rose by 33,000, and professional and business services grew by a whopping 76,000 jobs.
We're at a pace way higher than what I thought, and the participation rate over the last year is flat. That's amazing in an economy where a lot of people are getting older, a lot of people are retiring, and it's those people continuing to come in. How much longer we have of it, I don't know.
And businesses aren't just hiring more people, they're paying more too. Wages rose 6 cents to $27.77 in April, and that's a 3.2% jump over the year. At the job fair, Gilbert hit nearly every booth.
What positions are you guys hiring for at this time?
And recruiters said the job candidates here came prepared.
Some of them have college degrees. Some of them have certifications. They really have brought it all today. They have left nothing at home. They have left nothing out. They have came prepared to leave with a job today.
Here in Washington, lawmakers are fighting over what's driving all of this hiring and who deserves the credit. But no one can deny that America's job market keeps rising above expectations. For Nightly Business Report, I'm Elon Mui in Washington.
And investors want to know if today's strong jobs report will alter the Federal Reserve's thinking on interest rates. Today, Steve Leisman spoke to a number of Fed officials to find out. He reports for us tonight from Stanford, California.
A very strong jobs report and a strong decline in the unemployment rate, but not a strong reaction from Federal Reserve officials. CNBC interviewed 3 Fed presidents at the Hoover Institution Monetary Policy Conference, and all thought policy was pretty much in a good place right now, and they're not moved to hike rates because of the stronger growth or cut rates because of low inflation.
The signal of low inflation was that growth was going down, but there's no evidence of that. The economy is in a really strong place. So I'm willing to be patient, right, on the inflation on the downside as well as inflation on the upside.
Dallas Fed President Robert Kaplan agrees that the policy rate is in a good place and sees growth this year between 2–2.5%. That would be weaker than the 3% of last year. And he does have some concerns about global growth, which is a reason he and other Fed officials are not in any hurry to raise rates.
I worry that weak growth outside the United States, particularly in Europe, we're not immune to it, and some of that is spilling over. And particularly that's the case because almost 50% of S&P 500 earnings and profits come from outside the United States. So I think that's a bigger issue that I think will have some muting effect on GDP growth here.
One Fed official, St. Louis Fed President Jim Bullard, does believe that rates may be too high, but again, he's in no hurry to cut.
I think we're a little tight on the funds rate, not too much, but a little bit tight. I think the global safe real interest rate short term is about 0. If you add the 2% inflation target to that, you get to 2%. We're at 240. Sounds a little bit tight to me.
And so the consistent message from Fed officials is one of patience, waiting until inflation either rises and forces them to raise rates, or it falls along with weaker growth and forces rate cuts. But it could be months before that happens. For Nightly Business Report, I'm Steve Leisman in Stanford, California.
Let's turn now to Russ Kosterich for more analysis on today's jobs report. He's a portfolio manager with BlackRock Global Allocation Fund. Great to see you in studio tonight. Thanks for joining us. Your opinions of this report, I think it kind of basically confirms your overall thesis about the economy.
It does. This was about as close to a Goldilocks report as you're going to get. You had strong job growth. It's continued. Wage growth is modest. It's not causing any real inflation. So from the perspective of the Fed, they can continue to be patient. From the perspective of the economy, compared to the fears people had back in December of a recession, those are now looking very overblown.
You're not impressed with the number that so many people are talking about, and that is the unemployment rate itself. Why?
It's not that I'm not impressed with it. It just, you have to realize there's a lot of noise around it. And to some extent, when people saw that drop, you also need to adjust for the participation rate. But the signal out of the overall non-farm payroll report is very clear. The U.S. economy is creating a number of jobs actually faster than the rate of growth in the labor market. So all else equal, that unemployment rate probably continues to grind lower. But I think the two key numbers, job creation and wages.
Is it sustainable, though, especially given the fact that we've had an expansion for a good 10 years now?
Well, at some point, you are going to see slowdown. Now, having said that, we've been expecting that for some time, but one of the challenges is you are going to have a more difficult time finding workers. And particularly as that participation rate may not come up as fast as people would like, that is going to be a challenge for companies finding qualified workers, and really, can you pay them?
Exactly. Well, you went right to where I was going to go next, which is wages. We did see some upward pressure on wages, but employers are now competing for an increasingly smaller pool of workers. How much more upside pressure do you think there will be on wages?
There probably is some modest pressure, and certainly there's pressure for certain careers and certain skill sets that are in short supply. But there have been some fundamental changes in the economy. If we would have spoken about the fact that the unemployment rate's been consistently below 4%, and you've got wage growth barely above 3%, that does signal a fundamental change in the economy. What's changed? Demographics, technology, and it also suggests a very rapid drop in unionization relative to 30 or 40 years ago.
Very good point. On that, Russ, great to see you again.
Thanks, Sue.
Thanks for joining us. Russ Kosterich joining us tonight from BlackRock Global Allocation Fund. Well, one area where help is wanted is in the telecom industry, especially with the rollout of 5G, which needs updated infrastructure to be successful. Kate Rogers is in Lewisville, Texas for us tonight.
The race to 5G is a race America must win.
The race to 5G, or fifth-generation cellular wireless, is on, with launches from major carriers including Verizon and AT&T. The technology promises increased speed and capacity for greater connectivity, thanks in large part to workers like Jordan Robinson.
I help you have cell phone service in hard-to-reach places.
The Marine veteran is a tower climber for information communication tech giant Ericsson, which is making the equipment and rolling out the infrastructure for this next wave of technology nationwide. Ericsson actively recruits veterans and trains workers at its 5 new training facilities across the country.
They learn to climb towers like these ones, which can reach hundreds of feet up into the air, and they learn how to construct the equipment the network relies on to operate.
Tower climbers are really the backbone behind the network. You know, they climb infrastructures, whether it's rooftops or major towers, and they actually assemble, they construct the equipment on top of these cell towers that we all use every day.
As demand for the technology increases, Ericsson predicts mobile data traffic will be 8 times greater by 2023. But finding workers in a tight labor market can be a challenge. Erickson has 1,700 climbers today and says it will need 1,000 more in the next 2 years.
And with the economy so good, it's hard to recruit people that want to travel and build these networks.
Is that linear or nonlinear? Nonlinear.
The company offers benefits, including a 401k plan and tuition reimbursement for those looking to advance their careers. And while the days can be long and weather can sometimes be challenging, Robinson said the job has its perks, too.
The view. You always get to see something really pretty, or you get to see miles and miles of just forest, or you think you're in the middle of nowhere and then like you climb 200 feet in the air and then you're like, oh, there's like a whole town not 5 minutes away. So like enjoying the view is, I think, the best part.
For Nightly Business Report, I'm Kate Rogers in Louisville, Texas.
President Trump is reportedly considering nominating one of his former domestic policy aides to the Federal Reserve Board. Paul Winfrey now oversees economic policy studies at the Heritage Foundation. According to the Wall Street Journal, White House officials caution that consideration of Winfrey is still in its early stages. The president's previous nominees, Herman Cain and Stephen Moore, withdrew their names following resistance from some Republican senators. Berkshire Hathaway's annual meeting is this weekend. Late yesterday, Warren Buffett told Becky Quick that his company has been buying shares of Amazon, but added that he's not the one behind the purchases.
I'll tell you one thing you'll see in the 13F, which comes out in a couple of weeks, which may cause you to ask me that question in 2 weeks, but doesn't really, is not significant from my standpoint. One of the two other fellows in the office that manage money.
Todd and Ted?
Todd and Ted. One of them bought some Amazon, but so it'll show up on the 13F. It is not true to say that I am buying Amazon. It's true to say that Berkshire has bought whatever shows up there.
Although you've been a fan of Amazon and Jeff Bezos for a long time.
Yeah, I've been a fan, and I've been an idiot for not buying it. But I just want you to know that it's no personality changes taking place or anything. It's somebody else's.
Shares of Amazon moved higher in today's trading session. It is time to take a look at some of today's upgrades and downgrades. Walmart was upgraded to outperform from market perform at Bernstein. The analyst cites the retailer's ability to compete with Amazon. The price target is $115. The stock was up about 1% to 102.08. That same Bernstein analyst downgraded Target to market perform from outperform. The firm questions management's strategy of growth over cost containment. The price target is $75. The shares fell a fraction to $75.94. Bristol-Myers Squibb was upgraded to overweight from equal weight at Barclays. The analyst cites increased confidence in the Celgene acquisition. The price target is $55. The shares rose more than 3.5% to $48.62. IT company Cognizant was downgraded by a number of firms, including Deutsche Bank, which lowered its rating to hold from buy. The analyst cites that company's disappointing earnings and weak outlook. The price target is 63. The stock fell 11% to 59.25. Still ahead, our market monitor shares his stock picking strategy and offers 3 names he's investing in right now. A new class of migraine drugs was expected to help boost sales for drug companies. But this week's quarterly reports from Big Pharma instead shows a growing headache. Meg Terrell explains.
You've probably seen the TV commercials. A new migraine medicine called Aimovig hit the market last year from drug companies Amgen and Novartis. It's one of a group that was expected to be major new moneymakers for the pharma industry.
And this is the first migraine prevention therapy probably approved in the past 50 years. So I think, there's definitely a huge opportunity, and these medicines seem quite effective. When it works in someone, it truly, truly does seem to work.
As many as 40 million people in the United States suffer from migraines, with about 16 million estimated to have chronic or episodic forms, which cause at least 4 migraine days a month. In addition to Aimovig, new drugs were approved in the last year from Eli Lilly and Teva Pharmaceuticals. But sales in the drug makers' reports this week have disappointed. Aimovig drew $59 million in first quarter revenue for Amgen, missing Wall Street's estimate of at least $80 million. And sales were lower for Teva's Ajovy and Lilly's Emgality. That's not because patients aren't taking the drugs.
Amgen reported a couple days ago they had 200,000 people that have been treated with the medicine. Now, I do think there's some complexity due to the fact that other drugs are coming to the market that are relatively similar to Amgen's.
And where there's competition between similar medicines, there are often price wars. These drugs all carry a sticker price of $6,900 a year. But Cantor Fitzgerald's Alethea Young estimates they're probably being discounted by 30 to 40% as drug makers compete to attract patients. Meanwhile, these medicines won't be alone on the market for long. New competitors are on the horizon from biotech company Alder Biopharmaceuticals and Botox maker Allergan. Young estimates it's a $15 billion to $20 billion market opportunity, even if early sales are causing investors pain. For Nightly Business Report, I'm Meg Terrell.
Slow sales puts the brake on Fiat Chrysler, and that's where we begin tonight's market focus. The automobile company's profits were cut nearly in half and fell short of analysts' expectations. Fiat Chrysler cited changes in production, but is confident its new models will help it meet full-year profit targets. The stock was up nearly 5.5% to $15.86. Strong sales of household products helped Newell Brands post better than expected adjusted earnings, but the maker of Rubbermaid storage containers, Sharpie markers, and Elmer's glue said the Toys R Us bankruptcy did impact its results. The stock soared today 13.5% to $16.63. Dish Network lost more than 260,000 subscribers, which led to a decline in revenue. But the company's results were essentially in line with estimates. The shares rose nearly 4.5% to $35.08. Sinclair Broadcast, which is the largest U.S. broadcast station owner, is getting even bigger. The company reached a deal with Disney to buy 21 of their regional sports networks. Disney originally acquired the networks after its $71 billion acquisition of 21st Century Fox's film and television assets. Sinclair shares rose just about 3% to $44.95. It's time for our weekly market monitor who likes companies he says are not just leaders in their industries, but are names that will hold up in an economic downturn. Joining us is Matthew Roddy, portfolio manager with Rockland Trust. Welcome back. Nice to have you here, Matt.
Thank you for having me, Sue.
So these are leaders, but they're a little bit of a downturn hedge, I guess is the best way to put it, because you say if things disappoint, you want these names. So let's get to the first one, which is Raytheon. Why do you like it?
Yeah, so Raytheon is a company that obviously is not going to be beholden to the business cycle. Actually, the defense industry has been a growth industry, growing above inflation for the last 15 years, and that's accelerated recently. And they're in the right verticals with missile defense and cybersecurity. I mean, I think we've all heard the stories of hacking and electronic surveillance and so forth, and Raytheon's really in those verticals that are very helpful for their growth. And we do expect that they'll be able to deliver 7% revenue growth, revenue growth is hard to come by right now. That helps them deliver on the bottom line. And they've been growing their dividend for the last 10 years at 12% a year.
But it's 20% off of the highs from last year. So I'm assuming that you're taking a very long-term view of the stock.
Yeah, absolutely. I mean, we recently got into this name. It's actually our probably most recent name. So we're buying in here off of those highs. I mean, they were up in 220. We loved the company, but it was a little richer there. And now we're entering it at this level in the 170s, 180s. And it's been, we like the company. We think it's it's at a good level to be buying today.
All right. Next is a name that many people have in their kitchen cupboard, and that is McCormick.
Yeah, I mean, we all see the spices in our cabinets. They're actually the leader in the branded spice market. They're the leader in the white label spice market. They're the leader in condiments. They're the leader in sauces and marinades. They're the leader globally as well as domestically. They also sell to companies like McDonald's and Yum. And, they're really just at PepsiCo. They're really in everything They have 1,500 suppliers, 14,000 raw materials. The business could never be replicated by anyone else. They've been growing their dividends at 9%. They've got great consistent margins. It's a beautiful business, and there's no way anyone else could really come in with all the things that go into it to disrupt it.
All right, next is kind of a healthcare play, but in a different way. Cerner, why do you like it?
Yeah, I mean, healthcare costs have been skyrocketing. We all know that. You know, you were just talking about sort of wages and that being an issue, and drug prices are an issue. And this is a company that actually helps to lower the cost structure in the healthcare market. It's a healthcare IT firm. It deals with electronic health records. It also deals with a lot of data, mining the data to try and figure out ways to become better and more efficient healthcare companies. They're the leader in the business. They've been founder-run for a long time, but there was a deal recently made with an activist investor to really kind of increase the capital allocation plan and the margins, and that's a positive for the stock. They just put in their first dividend, and we really like this company. They've got a great product. They've been building this product themselves rather than putting it together, and so they've got a great product on the market too.
On that note, Matt, thank you so much. Matt Roddy with Rockland Trust.
Thank you.
Coming up, one entrepreneur's bright idea to switch to something smarter and safer. Here's a look at what to watch for next week. On Wednesday, Dow component Disney reports its earnings, its first report since it completed its purchase of 21st Century Fox's assets. Also on Wednesday, a Chinese trade delegation is set to return to Washington for further trade negotiations. On Thursday, inflation will once again be in focus with the release of the Producer Price Index. That's what's ahead next week. Circuit breakers work pretty well most of the time. If they switch off, we turn them back on manually. That technology hasn't changed much since the first patent was issued to Thomas Edison 140 years ago. But a former electrician turned entrepreneur in Charlotte, North Carolina, got the bright idea to flip the switch and bring circuit breakers into the digital age.
They're basically switches.
Circuit breakers are crucial to Ryan Kennedy. They are mechanical switches that open or break a circuit during an electrical surge to protect equipment downstream.
And that is in every building today.
They're also part of his 25-year quest to build a better electrical system.
To turn it off, you got to go manually pull levers. And that just, to me, seemed fundamentally wrong. You see the tablets, phones, things like that. Everything else is operating off of those devices. Electrical power wasn't.
Kennedy helped build office towers in the 1990s, remaking the skyline in his hometown, Charlotte, North Carolina. He's also seen how dangerous their electrical systems can be.
You know, imagine a high-rise building completely down from an arc flash event for weeks at a time. It can cause tremendous amounts of damage and downtime.
A current surging into the air can create an arc flash. It can heat the air to more than 30,000 degrees.
It can cause death, severe injury, burns.
It happens all the time. During an April storm in New Jersey, utility workers scrambled away from danger. In December, a flash lit up the night sky in New York City, causing a fire at a power plant. And investigators in Paris say electricity may have caused the fire that damaged Notre Dame. A faster circuit breaker can help limit the risk.
This is our solid-state semiconductor.
Solid state because there are no moving parts. Faster because semiconductors break the flow of electricity instead of mechanical switches.
I mean, 3,000 times faster than, the fastest mechanical breaker.
While working with Dennis Carousis on a project in 2014, Kennedy noticed improvements in materials and computing power that might make digital breakers a cost-effective business. They founded Atom Power to find out.
It can interrupt up to 100,000 amps.
Yeah. Which, by the way, there's no circuit breaker that does any more than that.
Military contractors are buying and testing the first-generation model. A standard breaker might cost less than half, but watch. A single 100-amp digital breaker can be converted to 15 amps instantly. There's a remote control option, too. Underwriters Laboratories, the safety inspector, tested Atom Power's breaker last year. If it's certified, and Kennedy believes it will be the first ever UL-listed solid-state circuit breaker. Generation 2, still to be tested by UL, is cheaper because Atom Power is now making its own semiconductors in Charlotte. The main attraction, though, is safety.
You see that big black cable there? That thing is a short circuit between two different phases. Devastating under normal circumstances. Ready? There we go. Fastest circuit breaker in the world. It's really anticlimactic.
And it's caught the attention of utilities. Atlanta-based Southern Company with 9 million customers hopes to begin testing Atom Power's breakers this year.
You're effectively going from interrupting hazards at speeds like you'd flip a light switch to nearly the speed of light.
Eventually, they might even be in your basement.
Probably sooner than you could imagine.
Electrical systems are light years behind where everyone else is. It's kind of the holy grail in electrical engineering.
Kennedy is hoping the UL certification comes through in time for about 100 companies to begin testing the digital breakers this year. 3 of the 4 major manufacturers of circuit breakers, Siemens, ABB, and Eaton, are Atom Power investors. Here's a look at the final day's numbers on Wall Street. The Dow rose 197 points to 26,504. NASDAQ was up 127. S&P 500 added 28. For the week, the major averages were basically flat. That'll do it for Nightly Business Report tonight. I'm Sue Herrera. Thanks for joining us. Have a great weekend. We'll see you Monday.